Welcome to the Real Vision Daily Briefing. I'm Ash Bennington, joined once again by Tommy Thornton. Tom, welcome.
Hey, Ash, nice to see you. It's another Tuesday.
Pleasure to be here with you again. A lot happening today. We're going to be talking about the extraordinary volatility in Bitcoin, Fed Chair Powell's testimony on the Hill, and market sentiment rebounding in U.S. equities. But first, Tommy, the Real Vision Festival of Learning kicks off at 10 a.m. tomorrow. What are you doing in the festival? Tell me about this.
I think I'm speaking 3 times, and I'm really looking forward to meeting Mike Green. And I've never chatted with Mike before. I'm a huge fan. Hold on, let me turn this down a little. I'm a huge fan of Mike's work. I think he's one of the more measured people that I've ever watched on Real Vision. And he's actually going to interview me about, I can't say the word, but it's something like how I effed up and ended up making money. So I actually have done that, and it's not like, oh, I bought something and it went down, and anyway, it's going to be good. It's actually really educational, and I think people will get a lot out of it.
So it's a true life account.
Yeah, and I think a lot of other people have made the same mistakes and have made money by making this very, very bad mistake.
Yeah.
Bad.
Yeah. So that sounds fascinating. And just a reminder for our audience, at midnight tonight, the price of tickets goes up from $499 to $599. So if you're watching and you want a ticket for the Festival of Learning, see the link in the description below, and our our Real Vision Daily Briefing viewers can get an additional 10% off when they use the code Daily Briefing at checkout. And at that price, you receive a plus tier subscription to Real Vision along with your ticket, which is a pretty good deal. That's great.
Yeah, and 2 free drink tickets at the bar, right?
Can we do it in Greenwich? Can I just come up? We'll do it in Greenwich.
Yeah, come on up. Look at me. I come and hang out. Got a sofa right there that,
It's much more comfortable looking than my apartment. I can assure you of that. My New York City.
It's an old house that's been refurbished in Greenwich. It's my office.
Yeah.
This is not my house.
All right, Tommy, let's jump in here and talk about Bitcoin. We were talking about this a little bit off camera. Tell us, what do you make of the recent price action?
I don't know if we are completely washed out on the downside. And there are a couple things that I've tweeted out over the last few days. I haven't been positive on Bitcoin. I see 5 waves going down. We've actually qualified into the 5th wave in Bitcoin on the downside. And yes, I have some tweets out earlier with Ethereum and Bitcoin. I look at the mark indicators, and one of the indicators, the sequential, which is one of the main indicators on Sunday for both Bitcoin and Ethereum, did trigger buy signals. However, we weren't at new lows yet, and we were just sort of holding support. So there's a secondary indicator called the combo, and the combo, it has not triggered, and I still see a few more days lower. And to trigger the combo, we have to make new lows going forward. So on Bitcoin, it's on day 11, so we're going to need 2 more new lows, 2 more days of new lows. Ethereum is on day 4, so that's a bit more, it's going to take a little bit more time for that to play out. But it could, you could see some bounces here and there. And I remember, I think we talked about it. It was either you or that fabulous Ed Harrison, who I will miss. We talked about it, that Julian Brigden and I talk every few weeks, and he was telling me when this whole China crackdown was coming, he said, this is really serious, and it's coming from the top down in the government. And I think we know who that is, or some of the main players there. So I think they're really serious about this, and I do think it's a risk, and I think people are still generally bullish on Bitcoin. They're hopeful, and I have no axe to grind because I don't trade Bitcoin. I analyze Bitcoin, so I have mostly an unbiased view. But when I look at one of my sentiment indicators, I look at CNBC's website, and sometimes whatever they're saying, I will look at it and say, no, it's not a complete washout yet. Because they're saying, there's a headline saying, yes, it's not quite in a bear market yet. And I don't know what percentage or type of move that we need to see to get Bitcoin and Ethereum into a bear market, but I'll tell you, this is pretty dramatic what we've seen.
CNBC is the counter indicator for all things digital assets.
No, they're a counter indicator for a lot of things. I mean, I was telling someone today, I said, they are, when you watch CNBC, and I have friends that work at CNBC, and they talk about what's already worked. Hey, today we're talking about Google hit a new high, Microsoft hit a new high. Who cares? Let's talk about what you can buy right now that has more upside rather than something that's already had a giant move. I mean, maybe that's just my process where I like to talk about things that are going to move soon, not what already has happened. So
what a crazy idea.
Well, I know that's why I'm never on CNBC, but I think that with Bitcoin, I'd like to see a real washout. I'd like to see some fear really get into it. And I know I just don't see it enough. Maybe I'm not looking in the right places or hearing it from certain people, but you got to see some people throw in the towel and say enough. And speaking of throwing in the towel, I think we talked about CoinDesk, and I bought it, recommended buying it just a small amount on the day of the offering.
I think, Tommy, I think you mean Coinbase.
Coinbase, sorry. Yeah, sorry. So I bought some, and I averaged my cost down, and that was sort of my plan. It was sort of a multi-quarter type idea because they make so much money on the commissions that they charge, and it's just obscene. It's like 1970s style commissions, and they don't have the competition quite yet that there's no, I don't see a Charles Schwab disrupting their business model yet. So I was thinking, okay, this company, Bitcoin, Ethereum, all the cryptos go up or down. They're making money with all the volatility, but I gave up today. I said, nah, I really don't feel like holding on to this. It's a loser. I can rebuy it. That's kind of my thought. If it starts to stabilize and move up, gets a squeeze, I'll rebuy it, but move on.
Yeah. By the way, I should say I ran markets coverage at CoinDesk, and I used to goof it up. In the stories, they would have to change Coinbase to CoinDesk and CoinDesk to Coinbase in the actual stories that I was writing for CoinDesk.
Really? Okay. So sorry, everyone.
By the way, what you're describing is the classic description of capitulation. Tell us a little bit about what capitulation looks like, how you think about capitulation more broadly, and how you think it might apply or what it might look like if it were to happen in Bitcoin.
Okay, well, there's upside capitulation and downside capitulation, and you can reverse either way. The downside capitulation, generally speaking, you see extreme volatility, right before it, and we've seen that with Bitcoin, giant volume, and then you get a reversal. So yeah, maybe this was a bit of a reversal, some capitulation. I don't see it yet with the fear. One other thing that you tend to see at bottoms, you have the lower price targets now. Now, Scott Menard from, is it Guggenheim or, BlackRock? I get them mixed up. He came out and he's had a 400,000 price target on Bitcoin. He came out and said 20,000 today. Okay, so he's off, $380,000 from his price target. But I think that's a start. Yeah, I mean, okay. So our new valuation model says 20,000. I don't know. But or you see people. There's been some famous Bitcoin bulls that have had giant price targets, and then at the lows, they said, I no longer want to give price targets. It's a fruitless endeavor. And then it goes up, and then they start giving price targets again. So that's what I think is happening. I just don't see the pukage yet that is really, where I can call bottom.
So insufficient pukage to see capitulation, to see what you think is a bottom.
I mean, if we see it like a newspaper headline, New York Post or New York Times about, the end of the world with Bitcoin or crypto, that's probably going to be, sufficient.
But and listen, I just want to play devil's advocate here. You obviously are very serious about technical analysis, about DeMark indicators. This isn't something that I do. I'm not a technical analyst. But I look, and what I see is kind of striking. I'll give you two things on the price side that are interesting to me. The first is, this is based on work from Willie Wu that I read a few weeks ago about the 2017 massive bull market in Bitcoin, where we saw 40+% retracements during that massive bull rally when it, some number of X timed in a relatively short period of time. This strikes me as, something that's just about the volatility of the asset class. Let me just throw out some data points for you. So the first, and to me, perhaps most significant one, is that we see support around this 32,000 level, which is roughly 50% of the 52-week high. It dipped down. I saw this morning it was trading around 29, maybe even the high 28s, depending upon what exchange you saw it trading on. When there's volatility, we often get inter-exchange deltas on the price because they're not, there's no national best bid, best offer, obviously, for Bitcoin. So you see that volatility and you see that those price spreads. But when I look across the screen here, here's what I see, and this is what's intriguing to me. And you tell me what you think, Tommy. To me, it just screams volatility. So the week-to-date performance on Bitcoin is -8%. The 1 month performance on Bitcoin is -14%. Year to date, roughly 6 months through June 22nd, we are up 12.8%. So if you bought Bitcoin on January 1, you're up 12.8%. And 1 year performance, 12-month performance of Bitcoin up 239-ish%. Now, if you bought at the top and your dollar is currently worth 50 cents, that doesn't feel like much other than cold comfort. But when I look at those numbers, it's just striking to me. I just see volatility, intense volatility. I don't know, is it directional? Is it not directional? How do we know? How do you know? And what do DeMark indicators and technical indicators give you as a guide in a situation such as this?
Well, I can say that the DeMark indicators have worked pretty well, and over the general longer period. This last run up into the February highs, that had the daily signals producing short-term little 10% drops, which is for Bitcoin. That's not volatility. That's like bid-ask spread for the bulls. They're like, oh, no problem, buy more. But the thing that I was really keying on was the weekly. So when I see daily signals getting run over, and trust me, I've seen it 100 times or more, where the signals on the daily don't work, or they don't produce a significant enough pullback for some people. I mean, a 10% pullback is that's job done. It's doing what it's supposed to do. Or even a stall. It's an exhaustion signal. But when I start to see longer term exhaustion signals on the weekly, which we saw when it was over 60,000, that starts to give me a bit of an intermediate term topping situation that I'm looking out for. So it's pulled back. We've had some volatility all the way down. We went down hard. We went back up. I mean, it's like the Elon Musk tweets have caused a lot of volatility. But Bitcoin to me is really a sentiment-driven asset, and it's very hard for me. And a lot of people could disagree and say, well, maybe you need to learn about it. Maybe I do. But I think it's just sentiment driven. And the technical stuff is basically a sentiment driven type of indicator. That's how I've looked at it. I also look at waves, and it's in the fifth wave down. So if it goes lower, which I think it will, that will be the final wave down. And that happened in from 2017 through 2018. And when it was in $3,200, I had DeMark buy signals. And I will tell you this. I told a lot of people. I was talking about it on hedge fund telemetry, and I didn't have a whole lot of people get so enthusiastic about it, which gave me the thought of that's probably when you want to be more inclined to be a buyer. Went over 4,000. I said, hey, this thing's got legs, and it continued higher, and I had a few, buy opportunities that I recommended. So it's sentiment is really, can be seen in technical indicators. Absolutely.
Yeah, you mentioned exhaustion signals from a DeMark perspective, which is something that you've talked about here before. Give us a little bit of a primer on exhaustion signals and specifically how they relate to your view of Bitcoin.
Okay, well, it actually, the DeMark signals, I look at the sequential and combo. Not going to go through it too much on this, but basically they are a trend and trend indicator that once you start to get into those numbers where there is a setup, which is the first nine green numbers, you can see it on my Twitter, you can see the charts. That's the setup, and then after that, you get more of a confirmation called the sequential that will start, and then it ends with a red 13. Now, when I see those types of signals, you tend to see a reversal within the next 10 bars, next 10 days, next 10 weeks. And that's if they don't trigger a reversal, then the trend will likely continue. I actually offer some information on my site. If anybody wants, I can send them some of the primers that I have. It's a little complex. It took me 20 years to figure out how to use them.
Yeah. But it's interesting that your thesis is that because it's such a sentiment-driven asset class, that these signals apply very closely in the price action that you see.
Yeah, and I run DeMark indicators on stocks, bonds, currencies, commodities, economic reports. I track everything, and I try to find things sometimes that are completely obscure. And like I always do it in the spring around Cinco de Mayo on Mexican avocados because you can track that on Bloomberg. So that's something I do. You can always see when it peaks. It's right around May. Surprising, but the indicators tend to work really well that way. And the indicators tend to work really, really well on commodities, currencies, rates. It's worked really well lately. The S&P, people will complain and say, oh, it doesn't work. They don't work. Well, they actually do, and it's difficult though when you have this super high or super strong trending market. We've seen a bunch of daily signals and it stalls out for a few days or weeks, and the last pullback we had some signals right before it. So it's a lot of people expect a 1987 correct or crash every time you get a signal, but that doesn't necessarily that doesn't mean it's going to happen. It could mean it's just going to stall out for a while.
Yeah. By the way, I should mention we're being broadcast live on Twitter. Did you know that, Tommy? Literally, this show is being broadcast live on Twitter right now as we speak.
Hey, Twitter, what's happening? It's cool. I've actually watched some shows on Twitter. There's a couple of Bloomberg shows that they were doing live on Twitter, and so everybody's looking at their phone going, huh. No, it's cool. It's actually really cool. I love actually the interplay with the Real Vision people some of the comments, I get the mean tweets against me, and I always try to be a little bit funny. It doesn't bother me, everybody. It really doesn't. Oh, your chair squeaks. Oh, you're slouching. Or this guy's the worst. Hey, maybe true. We've heard.
I don't know where you're looking. I just see nothing but enormous love for you on Twitter, in the YouTube streaming chat, in the comments, in the questions. It's like everywhere. This is like you're one of our favorite guests.
Oh, thank you, Ash. The check's in the mail.
Speaking of checks and banks, one other thing that I wanted to throw out while we're having this conversation about Bitcoin is one of the stories, talk about things that we've heard many times before. I think I've heard at least half a dozen times that China has banned Bitcoin. And in the most recent wave of this, I guess you could call it an incremental, progressive crackdown. Basically, what PBOC, People's Bank of China, this is their Fed, obviously their central bank, a primary regulator and also monetary policy function, said to the Chinese banks, especially as I understand it, which is to say not very deeply, the Chinese development banks, the state-owned Chinese development banks, which is basically like, hey, we're serious. Don't make me have to turn this car around, kids. No trading and no mining. And so effectively what you have is PBOC telling their regulated banks, this is a no-go zone. And that applies not just to the state-owned banks, but also to the Ant Financials, the Alipays of the world. So they're basically signaling we're very serious about this. Now, they haven't banned cryptocurrency ownership. They haven't banned a payment yet. They certainly haven't banned possession for Chinese citizens. But what they're doing is what you would expect a very well-organized, centrally controlled state to do, which is cracking down gradually, incrementally, at the margins, squeezing out at every possible turn more and more players from the market.
Yeah, well, that's China. China's going to, they don't talk about it, they do it. And look at what happened with Jack Ma. Jack Ma is, he's missing in action. He's been neutered by the Chinese government because he became too powerful. Ant Financial is now going to be basically a state-owned bank. Their powers are, nullified. They were competing with the Chinese mega banks and almost like a shadow bank. So they don't. I've seen it. I mean, I've done some stuff with Chinese markets, and I've seen how if China doesn't like something, they just end it. It's over, and they're serious. It's not like the United States or in Europe where they just sort of talk about it in Congress and then it never happens. They will knock this out if they don't want it. And I don't know the extent of where they're going with this, but they're really serious. And that's exactly what Julian Brigden said to me. He said they are absolutely serious about the Bitcoin mining. I mean, they haven't said anything about outright banning it, but maybe they're soft pedaling here and saying, this is what we're going to do. Maybe they're going to do something more extreme. I don't know.
Yeah. By the way, I should say we've focused on Bitcoin because there's dramatic price action there. Obviously, people who bought at or near the top experienced a lot of pain. We don't want to sugarcoat that. 50%, sometimes greater than 50% retracement from a high. It's a real pain trade for people who bought in at the highs. But there's a lot of other things that are going on in the world today as well. I was actually reading the Hedge Fund Telemetry newsletter from today, June 22nd, where you call today something of a messy day. Let's talk a little bit about Jay Powell on the Hill giving testimony and what your takeaways from that testimony were.
Nothing's changed. He's saying the same exact thing, basically. He's backpedaled some of the hawkish comments that were, initially seen in the Fed statement. And he's backpedaling it, and there's a bunch of Fed speakers all week. They're probably it's sort of a passive-aggressive play right now. Some will be a little bit more hawkish. Some will be, Meister was, I think, saying, no, it's a wait and see. We want to see 2 big job number reports. So they're playing the game, which basically is just a waiting game for the market and giving a mixed message, which is perfect for the market because it doesn't swing one way or another. So what's going to happen? The equity market has exceptionally low volume today and yesterday too. The market is drifting higher with the leading by the mega cap tech names. And let me just look at where we ended up. I have like these custom indexes. Okay, so the MAGA index, which is Microsoft, Apple, Google, and Amazon, was up a little over 1%. The S&P was up 51 basis points, 0.5%. The Nasdaq 100 was up 94%. No surprise there with these mega cap names leading. So we've already seen it a bit. We've talked about it where you've seen the peak of reopening is probably behind us. The reopening trade names, the restaurants, hotels, airlines, theme parks are maybe a little behind us. Now, the other thing that's happening, and it's you can see it every day, every other day. You have this flip-flop of what's working and what's not working, and I look at factors of what's working. And so, like all the rate-sensitive financials were great yesterday, and they got murdered earlier today, and then they bounced back a bit.
Yeah, let me jump in there with the numbers from the close, right? So the Nasdaq is the big winner of the major indices today, up about 0.8%, closing at 14,253. The Dow up the least, up basically 0.2%, closing at 33,945. But this is exactly what you were saying, Tommy. It's like this weird ping pong effect between growth and value on the sector rotation. It's something that we could have had this conversation 3 months ago. It just seems to be like this ping pong. Tell us a little bit of what you make of that.
Well, one other thing that's interesting today, breadth was good yesterday, really strong.
95% of the S&P stocks were up yesterday.
And that's almost the opposite of Friday. And today, the NASDAQ, I just hit the NASDAQ and NYSE. So the NYSE was up 460 issues, and the NASDAQ was up 196 issues. And it closed the NASDAQ, that's the NASDAQ composite, that closed on its high for breadth today. So that's not necessarily a great message. And that's kind of the messiness that I'm seeing in the market. It's not like everything is working. And the other thing that was kind of crazy last week is that the market the S&P hit a new high that in the week and closed down on the week. And I think it was on Thursday or Friday that there were like almost 250 new 20-day lows. So if you get 20-day lows after a couple days after hitting a new all-time high, that's saying there's some underlying weakness out there in the market, and that's a bit of a concern. And the majority of ETFs that I track are still well below their 10-day and 20-day moving average, and about half of them are below the 50-day moving average. So it's not necessarily a great sign that we're at all-time highs and you have that type of action. It should be a lot stronger, let's just say. So perhaps the market's going to roar back and really break out and see more participation, but that's the data that I'm watching, and it's it's not everybody's stocks are going up.
Yeah. You also said something that was interesting where you said Jay Powell back on the Hill basically saying the same thing. I was just looking at the lead on the top story in Bloomberg's top function. And the lead is stocks climbed after Federal Reserve Chair Jay Powell reiterated his view that inflation pressures will be transitory even after a notable increase in recent months. I mean, you literally could have printed that, obviously on Wednesday when the statement came out in minutes. I mean, it's really, there's no new information in the market.
Well, this kind of reminds me of the Greenspan and Bernanke and Yellen. They said the same thing over and over and over. And Greenspan was great because he said stuff and everybody was kind of questioning what the hell did he just say. And he was a master at that. So yeah, I think that the main thing that I think the Fed's going to be on hold doing anything unless something crazy happens. Repo markets are still, wild. I didn't see the numbers today on that, but I think that the Fed is going to have more pressure to, change policy, lower the amount that the QE per month. That'll help the repo markets because there's just way too much cash looking for a home and looking for money markets at Fidelity and all these other random places.
Yeah. By the way, talking of the love that Tommy Thornton gets on Real Vision, we have literally like 2 pages of questions for you and like 10 minutes to get them done.
Okay, let's go. Speed.
You want to jump in for a speed round?
Yeah, let's go speed round.
Okay, here we go. Are there counterparty risks that could cause significant market or systemic risks if Bitcoin collapses? That is from Max. I wonder if that's Max Weethy. That sounds like it could be a Max Weethy question. We'll find out.
The counterparty risks, I mean, you can say Michael Saylor is a counterparty risk because he has a fair amount of Bitcoin with MicroStrategy. I don't know if there, I mean, yeah, there's counterparty risk, but I don't know necessarily where. I mean, okay, everybody's talked about Tether and Binance and all these other things that are potential catalysts out there. That is a big risk. There's the people that say there's no issue there, and then there's the people that say this is a ticking time bomb. I probably lean more towards the ticking time bomb because I'd like to see a little bit more clarity with what assets they have. I mean, they're in the Cayman Islands, so maybe Raul can drop by and see what they have in their storage.
Stop by and say hello.
Yeah.
Patrick Smith, are the rate hikes all talk in a world where tech, retail, and real estate are all in deflation? Patrick Smith.
I think rate hikes are going to be a long way away. And I think we're going to be in this, we're going to taper, and then the markets are going to get difficult. So we're going to add a little bit back, and then we're going to taper, and then we're going to add a little bit back. And that can go over for a few more years. I don't see them raising rates. If they do raise rates, that would be actually bullish because the last few times they've raised rates, the markets have actually performed pretty well until they make the last rate hike, and that's always called the policy mistake, the last one. I know, go back to 1936 and 37 and going back to December of 2018. Oh, it's a mistake. Oh God, it's a mistake. The last one is always the mistake.
Yeah.
Oh,
I also remember
deflation. Go on. Hold on. Let me say something.
Go ahead.
Technology always is deflationary because you have better technology. It eliminates jobs. It eliminates the need for 10 devices. You got an iPhone that you only need an iPhone. You don't need a fax machine, a camera, a computer, a phone. All these things. It's all in one. So yes, that's happening. I think the REITs sector is a little bit dangerous because, okay, we're reopening. People are told to come back to work, but not everybody's going back to work. And I think that a lot of these companies, especially in New York City, they're not going to need the amount of real estate that they have. And I don't think the REITs are going to collect they're back to old COVID, pre-COVID levels. They're not going to be making the same amount of money for a long time, if not ever. So I think their valuations are exceptionally high. And that's another one. Once we get the fully reopening and people start going back to work, we'll see how well those do. But I think there's risk there.
Yeah. Here's one from Megid X. We need a DeMark indicator on coin, Tommy.
On Coinbase?
They're looking at.
Okay. Yeah, it's a day 4 of 13 on the downside. That's why I puked out of it. I just didn't want to look at it anymore. Okay, next. I don't talk about it. I talk about my losses, though. I do broadcast my losses, and I jump on my sword. I could have been the low today. I'll buy it back.
Tom, nobody is more transparent about their losses than you are.
Yeah.
But literally, like in the whole industry.
I'm proud of that. I'm proud of my losses.
Tom, here's one for you. This is an interesting one. Tom, what do you think about Chinese tech stocks and China's overall market over the next 15 months? Also, Chinese stocks ADRs versus non-ADRs. These are the American depository receipts for owning them onshore in the U.S. So China tech stocks, ADRs versus non-ADRs to own.
Well, there's regulatory risk in China and in the U.S. So to China, they've seen the power of Alibaba, they've seen the power of Tencent and some of the others, and they're clamping down on them. And I think that's a headwind. And then you have the U.S., who's with their anti-Chinese rhetoric, will be tough. They print money, basically, these companies, and they're doing really, really well. They might run into some tough comps in the next few quarters. I have traded the KWeb ETF. I shorted it at the highs, made some money, tried to buy it, stopped out. But right now, I'm on the sidelines. I think China does have a little bit of risk right now.
Yeah. Here's a great question from UIM, even though the market is choppy, why isn't VIX going anywhere? ETF indexes are not breaking highs, and VIX is grinding lower day by day. Please share your thoughts on the VIX entry. And by the way, for reference, VIX closing out the day today at 16.66. I don't think there's any significance we can attribute to the 666 at the end of the number, but it is going down and it is relatively low.
Okay, so it was like 10 days ago, I said there's a little bit of a calm versus the storm. The volatility of the VIX, this was ahead of the Fed, was rising, and the VIX was not rising enough. And when I saw that happening, I could see that perhaps I overlaid that, and I also overlaid TLT, and that was rising as well. So we had a bit of a spike in the VIX, and then the market, in my opinion, has calmed down and is accepting the pseudo-hawkish rhetoric from the Fed and Powell, and is calming down. And I also think, well, this conspiracy theory, that Janet Yellen has her joystick and sells VIX, especially on Fridays, just to irritate everybody. But don't at me, people.
Looks like we get time for one more short question. Here's one that comes to us from Gabriel. Oil question. Do you see oil hitting $80 to $83 by September of this year? And for reference, it looks like WTI is last trade 73.08. This is July 21.
It's certainly possible, and I wouldn't be shocked if that happens. I was trading in and out of energy stocks all year, and I was long energy, got out of them, and I actually shorted them for some trades recently. I do think that we're getting a little extended on oil. The sentiment on oil is moving into the extreme zone. There's still some potential. It wouldn't take much to get it to those levels. But then again, think about what's going to happen with the consumer. It's like a tax hike every time energy prices go up, and that, I think, will put some pressure on oil prices. I don't think that they want oil prices, the powers that be, to go too high, because then they'll get pressure from other countries, and that, I think, they'll moderate it. So I think that oil prices, it can go a little bit more, but I'm not necessarily jumping in here saying this is a great buy right here.
Yeah, that's interesting and very well said, like getting a tax hike whenever energy prices, oil prices rise. And so conversely also, I should say, whenever the dollar goes down.
And I think that one last thing, I think we've talked about, I was expecting the dollar to rise, and it did. It got a little short-term overbought. I think it's going to come back down, but I still think that the dollar could continue higher, and it's frustrated the hell out of, I'm sure, all the dollar bears out there, and the inflation people and the anti-Fed people, and it's probably driven them absolutely crazy.
Yeah. Tom, as always on this show, we've covered a tremendous amount of ground, a lot of different ideas, a lot of different topics.
We had a lot more here, I'll just write about it tomorrow.
We're just going to have to get you to come back.
I'll see. Yeah, I'm supposed to be here a week from 2 weeks from today, yeah. Which I really love. I really like being on here. It's casual, it's fun. You're a great host, and I'm looking forward to the Real Vision Festival of Learning. I'm going to learn you a lot. So no, we're going to have a good time.
Yeah, that's actually just what I was about to pivot to. Once again, to say that at midnight tonight, prices go up. We'd love to see you there. It's always fun. I think it's the most fun event Real Vision does of the year because we just do all these really interesting things. Like we have Nobel Prize winner Daniel Kahneman coming in, Howard Marks on the program. It's just a great list of people and some really great panels, great discussions, and great conversation.
Yeah, Daniel's. Yeah, he's one that I definitely want to watch. Hugh Hendry, is he on this year?
I don't know if Hugh is on this year, but I can tease this. I just did a conversation with Hugh Hendry today at noon that's going to be absolutely fantastic on the crypto side, talking about
the last time he injured himself or something was crazy. He's just funny as all hell. So I'm excited about that. Yeah. We've got a bunch of different things. I'm a fan. I'll be watching it. My newsletter that I post every day will probably be late because I'll be watching it and be distracted with all the good stuff.
Yeah, I think last time Hugh was surfing in high wind or high surf, and he busted his head open on a surfboard and came to the panel with a concussion and bleeding, but did the panel. Yeah. That's dedication.
That was I think he was really pretty good. And, very clear-headed, and maybe, knock some, calmness into him, because he's normally the most wild guest you can ever have on Real Vision, and I love that about him. Yeah, he was actually very focused today because we were talking about something that's really interesting, which is this tokenization revolution that's happening. I think Hugh is one of my favorite guests. He's brilliant, and you just never have any idea when the cameras go on where it's going to end, right? Yeah, and I'd like to party with that guy. That he just looks like a fun time. So join in tomorrow, please, if you are around. Join the Festival of Learning. Something I'm really looking forward to. I'm hosting a couple panels. I think on Friday. I don't know if I'm doing any tomorrow, but I'm hosting some on Friday, and I think maybe one on Thursday. So really looking forward to that. And Tommy, looking forward to seeing you there. Well, I'll be there. I'll shave. I'll put on a suit and tie and really look, suitish. Suit and ties are so not Real Vision, man. I can't remember when I wore a suit and tie the last time. I can't either. Dave Portnoy called me a suit on Twitter once. Were you because I have a suit on my handle, on my picture. I do too. Yeah, I need to change that. Tom, once again, thanks for joining us. Always a pleasure. All right, Ash. Thanks for watching, everyone.